So this week I moved some cash from SWVXX into SGOV, and I'm seriously thinking about cutting my position in Rigetti also, because even though it is house money, like I've already locked in my initial investment. The market seems really volatile right now, and I could lock in an additional $2,000 profit and just walk away with that money. And just kind of makes sense instead of just riding it out and seeing what happens, especially in the current market. So anyway, I'm going to share all that with you guys in today's video and more. What I'm going to do, I'm going to take you into the phone, share with you what's inside of my Roth IRA, and then I'm going to take you behind the scenes into the spreadsheet and let you see the overall performance of the Roth IRA, how everything's really moving and how it's performing, as well as some other thoughts I have regarding this portfolio moving forward. So let's dive in. I'm going to record the screen, show you guys the portfolio. 3, 2, 1, bam. Okay, let's open up Charles Schwab. Yeah, I will refresh it for you guys. So right now, this is Saturday morning here in China at 10:30 in the morning. So the markets are closed. Yesterday, you could see the Dow was down almost 0.25%. The Nasdaq and S&P pretty much flat. My portfolio was up maybe 0.1%. So not much, nothing special going on there. Right now, it's $60,911, and you can see I have $23,182 in cash and cash investments. But it's also not correct because, well, you'll see in just a moment as I show you the portfolio. But if we look at the portfolio, let me go view all the positions. So at the top, I really only have 2 stocks. That is Rigetti and SoundHound. So Rigetti, I did have, I sold some put options and made some income there. And I picked up 100 shares, and this thing went to the moon. It went up like over 200%. So I took my initial investment out by selling off a few shares, and I kept 70 shares because that was what was left after I took my initial investment. So this is house money, and it's still up 107%. So I'm thinking of cutting this one and just taking this whole $1,800 and just putting it in my pocket. Not in my pocket per se, but like put it back into the portfolio somewhere else. You know what I mean? And just lock that in. The next one I have there is SoundHound. Again, I did the same thing. I was selling put options and I got it signed. I got 100 shares. It went up to the moon and went like up over 100%. I took my initial investment out, and what's left is house money, which is not much. It's like $500. So not a big deal here if I just let this one ride, because actually, if I can buy back into this at a lower cost, like below, like I think at 988, if I can get it down there again, I'll go ahead and buy it again. So I'm not in a rush to do anything with this one. Next, we have my ETFs. So you can see I have SCHB, which is basically the overall stock market. It's pretty much the same thing as Vanguard's VTI. It's just a lower share price, so you can buy full shares instead of fractional shares. This one, 410 shares. And then I have SCHG, which is large cap growth. This is just like your big mega cap stocks. This is similar to Vanguard's VUG, almost the exact same thing as VUG. 325 shares there. Now, here's why I said my cash and cash investments was a little bit off, because I have an SGOV here, which is pretty much cash. It's like basically like a high yield savings account, and it pays every month. I have 100 shares there, and this is just a store of cash. But because SGOV is an ETF, it's more liquid, and I could sell it immediately and have that cash in my hand immediately to go buy something else if I want to do that. Then lastly, we have another ETF. We have T-SPY. This is S&P 500 income ETF, but they do like 0 DTE options inside of there, I think. So anyway, this is just to add some extra income. So once I max out the portfolio, I can't put any more money into the portfolio per year, because you get $7,500 for the 2026 year. I have some income coming in that I can use to continue buying stocks and growing the portfolio, even though I can't add any more money. So that's what that's doing there. And then at the bottom, we have the cash and the cash investments, which is AKA money market fund. We have SWVXX, which is Schwab's basically like a high yield account, right? It's like 4% annualized, pays every month. But this is not very liquid. And like when you buy this or sell this, it closes at the end of the day. So if I need money right now, I can't get it. If I sell this, I have to wait until the next trading day to get my cash so I can buy something. And that's why I'm moving this cash from SWVXX up here into SGOV. So I have more liquidity and more options to get to my money quicker if I need it. But actually, mostly I just want to use this as a high yield savings account to store cash in case I want to make a purchase, because I am looking at purchasing some land possibly, and I want to put the cash there so I don't use it. But this 10,000 in SWVXX, I'm going to move it up here to SGOV, so that'd be over 20,000 there for that purchase that I'm potentially going to make. And then lastly, I do have an additional $12,000 or $12,496 in cash that I can continue buying more ETFs with. So yeah, basically SWVXX is going to go into SGOV, and that's just going to be my store of cash for my purchase. The cash that I actually have on hand here, I'm going to put it into the portfolio as far as put it into other investments probably. So now that you know that, what I would like to do is take you guys into the spreadsheet and share with you the performance of this and what this looks like on paper, how it's performing and all that good stuff. So you can see, what's going on there behind the scenes. So I'm going to record the screen and share with you that. Maybe. I'm trying to record the screen. I'm not very technically challenged. I don't know how to say it. I can't even speak English. Anyway, 3, 2, 1, bam. All right, man. Sometimes I get lost for words, man. I've been speaking Chinese for 16 years. I've been living in China 16 years. I speak Chinese every day, and sometimes English just doesn't come to me. I just forget it. So anyway, sorry about that. I'll make this bigger for you guys. So here's the spreadsheet where I track everything. You can see we've got all the positions here: the Rigetti, Sounddown, SHB, SHG, T-SPY, SGOV. And there's my shares. The same stuff I showed you in the actual portfolio in my brokerage account, and my cost averages. Which again, cost average doesn't really matter, I guess. I mean, not for you guys, because it matters what you purchase the stock at, not what I purchase it at. But this is just an idea to give you an idea of the overall performance, how these perform over a longer time frame. So if we go here, we're not going to get into this day change and all the other stuff and the 52-week highs on those. We are going to get into the returns. And I'm getting a scratchy throat. Rigetti, you can see there, this is the profits, this is more than profits because I already took the profits out. I took everything here is house money, and I showed you the portfolio. It's like $1,800. But this is the return on what I have left in there. So anyway, 113% total return. It's slightly different than market return. I know it doesn't pay a dividend, but I was selling options on this, generating income. And so I added that to the income portion. So having income from options, it's the same thing like getting a dividend or something like that, or distribution in regards to, affecting your market return and total return on the ETF or stock. Soundhound, this is 18.6% total return. So this is including my options income. This is without the options income. SCHB, it does pay a small dividend, not a big one. But you can see this one, 10.59% on the market return and 11.26% if you include the dividends that I've received. And then we got SCHG, which is like right below here, 9.07 on the market and 9.29 on total return. This also has a very, very tiny dividend. So the market total return is slightly different, but not much different because the dividend is very tiny. Then we have my T-SPY, my covered call ETF. Market return is slightly negative, just over 0.25%. Total return is slightly positive, just over 0.5%. But this is a brand new position, and it's also, not a large position. So, lastly, we have my SGOV, my storage of cash here, which is slightly up. Now, something I'll share with you guys about this. because SGOV is like a high yield savings account kind of. You can see here the 52-week low. This is 100.27, and the 52-week high is 100.74. So basically, what this does, or how this works, if you not familiar with it, it's pretty much about $100 all the time. And this change at the end, it slowly creeps up every single month towards the end of the month. And then when they pay the distribution out, the percentage or whatever the interest rate, when they pay that out, then it comes back down. So it might start the month off at this 100.27, and it slowly creeps up towards 100.74. They pay that out, and it comes back down to 100.27. So, they have to take that distribution out. So that's why you have this fluctuation in this ETF, but it doesn't really move outside of this. Like it might be $100 flat. It might be, $100.90 or something like that, but it's usually in this range, 100.27 to 100.74. So if you do see any red here on your market return, it's not a big deal. It's just the fluctuation of this decimal points at the end, how they fluctuate from bottom to the top every month and then back down. So they just do this back and forth all the time. So that's all that is. If you see that, or if you invest in SGOV and you wonder what's going on with this thing, that's what it is. So it's just like a psychological thing. Don't let it mess with you. It's just a high yield savings account pretty much. If this messes up, you're in trouble, because that means America is gone. Like America, the U.S. dollar has completely collapsed and doesn't exist anymore. That's what's going to happen if so you have bigger problems at hand if there's a problem with SGOV. So anyway, in the dividend log, we don't care about 2025. This is 2026. So here in January 2026, I'll put this down just a little bit so you can see that it's 2026. I haven't done anything with Rigetti and Soundhound in terms of options. SCHB, SHG, they pay quarterly. So this is the beginning of the year, so they're not going to pay. I think they paid in December. Let me check. Yeah, they paid in December. So I'm not going to get paid for these two until March. And then T-SPY pays every month, which they paid at the very beginning of the month for some reason. I'm not sure why, but anyway, I got that already, $37.68. So I probably won't get this again until February, which I'll get more this time because I have more shares. SGOV hasn't paid yet, but they'll pay me this month, so I'll get a small payment from SGOV. If probably not going to amount to much, but anyway, so far I made the $46 because I did have some income from something else that I sold, and that was a put option. I sold a put option on SMCI, and I made some income from that put option, but I never got assigned, so that's why you don't see anything about SMCI there. But that's what that income was the put option there. And so I will get some money from SGOV, maybe like $50 or so. So we might make $100 this month in terms of income. But this is an income machine. This is a growth machine for retirement. I'm 44 years old. I can't touch this until I'm 59 and a half. But with the Roth IRA, you can, after 5 years, you can take out what you have put in. You just can't take out any of the growth. And you can take out what you put in penalty-free and tax-free. You just can't remove the growth. So that's why I said I'm putting that money in SGOV, possibly for buying a property, because I can take that money out because I've put it in myself and I've already paid taxes on that money. So I can take that out and buy a property with zero penalties. And it won't affect my portfolio because I won't have to sell any stocks. It's just a storage of cash. And it's just, collecting interest on the cash. So, not a big deal. I can pull it out with no penalties and make my purchase. So, that's really all I got for you guys. I do have one sold position here. I had, this is 2025, but I had WPay and I sold this at the end of 2025. So, but in 2026, I haven't sold anything. I sold WPay for a loss, you can see, because I wanted to get away from these volatile income style ETFs and this Roth IRA because it's supposed to grow. And, you have the NAV erosion and some of these things and stuff like that you have to fight and offset. And I just don't want to deal with that in a Roth IRA account. I want it to be, you know, less of a headache and just more boring, and just let it, you know, grow and do its thing. But as you've seen, I did have one income play here, but this is one that actually, so far, it's gone up. Like, I don't know, I think it went up like several 5-10%, plus it pays, you know, 14% yield. So that's fine for this account, but I don't want to overdo it. So yeah, that's all I got for you guys today, man. If you're interested in my regular portfolio, my income portfolios, they're over there on my other channel, the Dividend Nomad. I'll put the link down below, and check out the other links below too. I have a little newsletter and some stuff like that for free. And see you guys next time, man. Y'all take care.